G'day, money miners. I think this might be a bonus episode we put up tomorrow, JD, while it's fresh, because I'm actually really excited to bring the voice of Tshepo to the money miners. He has really, grabbed me in his LinkedIn posts around the BHP-Anglo deal, and I'll tell you why. A, because he talks so freely about things that people rarely ever talk about in the machinations of deal making and investment banking. B, he's got like some serious investment banking expertise, having worked in advisory capacity on some serious mining deals over the decades, and he's worked it across a broad spectrum of bulge bracket banks, UBS, HSBC, Citi, Standard Bank. I'm guessing, Tshepo, that you've worked in both South Africa and London. You understand the machinations of all of the key deal risks in BHP's bid for Anglo in a way that we haven't appreciated in our commentary on the deal to date. And I'm really excited to tease those out with you in this podcast. Have I given you the right rap sheet? Have I gotten you wrong there, Tshepo?
No, that's fantastic. Thank you.
The headline, one of your most recent posts, and this is the point that a lot of people want to talk about is the price. And I know you've written a lot about how important structure is, Excon in South Africa and taxes and all these things. But it did sort of scream out in one of your most recent posts that, a price of £50 per share for Anglo is what BHP would need in conjunction with getting the structure and all these things right. So can we just sort of frame it from the a sort of broader step, taking a step back, how you sort of see the deal, how you see it playing out, and how you see how BHP have approached the deal to date?
Okay, maybe I'll start off with just briefly about the price. I'm not sure how you get to how the two parties can get to an agreement on pricing. Just primarily, let's just look at what price deck are you going to use in the model. But the second one is effectively when you look at Anglo, the South American operations are currently not in distress, but they're being restructured. You saw late last year announcing that they're putting a lot of production offline, just primarily given that they need to mix a number of grades, which is another challenge with copper. But let's start with the price. What price do you actually put into an NPV model to actually have a discussion? And the long-term prices out there for the market is about $8,000 per ton. The current price is about $10,000 per ton. And if you look at historic multiples in terms of capital intensity, let's start off with Las Bambas, which Glencore was forced to sell to the Chinese. It came online at $22,000 per ton. Oyu Tolgoi, Reko Diq, they're coming at a capital intensity of about $44,000 per ton. So what price will you actually input into that model is a key driver of the valuation. I mean, I just don't see how you sit at a desk and Anglo-American say, what, if we sell these assets to you, you need to input a $44,000 per ton into your model as BHP. And Anglo saying that, you can't use our current cost structure, given that it did go up, given that they had a number of issues. But in 2 years' time, it's going to collapse again, those 2 months in South America. So how do you get to an agreement about those two key drivers when it comes to the NAV, net asset value valuation of those mines? I just don't see how you actually get to that. But you have to understand from the Anglo shareholders, they understand where copper is going in the long term. Therefore, they want as much money as close as possible to the long-term price, whereby you can think that the copper price will sort of migrate towards. And BHP shareholders on our other side, they want to pay as little as possible, even $10,000 per ton in that price deck. I don't think that shareholders will allow them to do that. So on the pricing, I don't see how they actually come to an agreement. But if you look at the fair value of the assets as well, if you were to value them, using this replacement cost, various methodologies, you could easily say that if you were to look at an intrinsic value plus a premium of those Anglo assets, you need to pay about 50 pounds per share. I don't see how BHP shareholders will approve that. So on the pricing, people think that they're close to one another, but I doubt it very much. Then you have to start talking about structure. There are various issues. I think with structure, you have to go back one step and say, what is Anglo-American structure? It is primarily listed on the Joburg Stock Exchange. It is primarily listed on the London Stock Exchange. Why is that the case? When they moved the listing, did this dual listing in the late 90s, the South African government allowed a number of things. One, when it comes to taxes, they gave them an agreement that they won't come due. You must remember that they have low book value of assets. Think about mining in the 90s. The second one, the South African government gave them permission to externalize not just capital, but dividends to be able to grow internationally. So those two agreements are quite key, a key foundation in this dual primary listing of Anglo American. I'll give an example on the DLC structures that Rio Tinto and BHP used to have up until 2 years ago. The DLCs will be the dual listed corporates, which have an equalization agreement between London and Australia. BHP has moved away from that, being only primarily listed in Australia. So I would have assumed that BHP, one, it is built on Billiton, which is a South African asset. They just sold, spun off South 32. So they understand these issues on the South African side. But it doesn't seem that they paid any attention to it. But more importantly, even when Anglo comes up with an announcement saying that BHP, the structure they are suggesting, is not suitable, it is not workable, it does not seem that the BHP advisors are taking it on board. I mean, the last communication they had was that we're not going to change price, we're not going to change structure. So why do you continue having a conversation with Anglo American? So from the way they approached it as well, BHP Billiton, I think it was quite naive, if I were to maybe put it best. Naive, yes, that's the word.
You've used the word amateurish in your writing as well, and like that's like I find that really interesting, right? It's like I'd love to tease into that. Why was the approach? Well, I mean, it was a leaked deal or anything, but they should have had their ducks in order. Like 101 before you bloody submit an MBIO, be ready. And from your perspective, they weren't ready. Why is that?
I'm not particularly sure. There was a level of naivety and maybe arrogance that we can just get this deal done. One thing, as I said, they just did the South 32 deal in South Africa. You know how early you have to bring the South African government, the South African SARS, SAP into the loop when you're doing these deals. Way before you even think about the structure, way before you actually think about the announcement, you have to bring them on board. You have to talk to the ministers just to say, this is what we're thinking. Are you okay with this structure, with this approach? What would you approve? Then you go back and actually come up with a structure that will be palatable to the authorities, to the party that you're trying to approach. So the way they did it, I'm not sure what to call it, to be honest. I'll just use the word naive, not just to be polite, to be honest.
You can be rude on here. It's okay, mate. And for our audience, probably won't know what SARS or SARB acronym means. But
SARB is South African Reserve Bank. But given that you have exchange controls in South Africa, they are quite key when you're talking about sort of cross-border transactions. Given that you're talking about capital, you're talking about foreign currency and all those things, they are quite key to sort of bring them along to understand what is actually going to happen. But more so for Anglo, that I'm sure that BHP, maybe the institutional knowledge within BHP is no longer there. I'm not sure. They should have known these facts, and the advisors should have known these facts. But somehow they seem to have brushed over it. I'm not sure what happened. Or maybe the chairman told the bankers, I want to do these deals, put out an announcement without actually understanding the nuances. But even that, there's still enough people within BHP Billiton, I think, even in Australia, who understand the history of both BHP Billiton, Anglo American and South Africa. So how they approached it is very, very strange, to be honest.
Yeah, that's such an interesting point. And it'd be awesome for us, I guess, to tease out some of the structural limitations or barriers that were kind of apparent to you from day dot. That it was clear, BHP hadn't thought about. One of them is, admittedly a word I'd never come across before until reading your post, and it might be unfamiliar to a lot of people then. Excon. It kept coming up. Excon. Can you explain what Excon means to the numpty Aussie punter? And why?
Excon is quite important from a South African perspective. It's exchange controls. The South African Reserve Bank still have these various regulations in terms of when capital goes out of the country and capital comes into the country, they actually have to monitor it, they have to approve it. But more importantly, on the Anglo side, Anglo is primarily dual listed between London and Joburg. That means that when you are a South African shareholder, when you're holding a London share of Anglo American, it does not form part of your foreign allocation when it comes to equities. Therefore, if you move the structure, immediately Anglo will go into your foreign allocation, which is limited. I think it's about 30%. I stand to be corrected, but I think it's 30%. That's the first issue when it comes to exchange control. The second one would be the capital and dividend externalization that Anglo American was allowed to do. They were just easy. They would have taken money from, let's say, a Kumba, from an Anglo place, and being able to send it over to the international subsidiaries. So immediately with that as well, when you say that there's change of control at Anglo American, the South African Reserve Bank is going to say, hey, you actually have all this money that you've externalized. We want it back in the country. Those conversations are incredibly difficult. We try to do it with the likes of Mondi when we unbundle Mondi out of Anglo American. That is on the South African Reserve Bank side. Then you come across South African Revenue Service, whereby Anglo American, on change of control, they're gonna say, you know what, you have all these capital gains. Now you need to pay your taxes in South Africa. I mean, imagine that the book values go back to the 1990s. You can imagine how huge that contingent liability is. Therefore, the fact that BHP and his advisors didn't think about this and say, we need to have a conversation with the South African Reserve Bank and the South African Revenue Service way before we actually come up with a structure or approach for Anglo American. That really, really surprises me. They shouldn't have overlooked this. And right now they're trying to walk it back, but I still don't think that they fully appreciate those additional payments that will sort of come due on the Anglo side if there is change of control. But more so as well, people are saying that in South America, there won't be any taxes due. I can bet you that there's no country that will allow a change of control of an asset. I saw it a number of years back when I tried to buy an asset for actually Anglo American in Mozambique. We sort of overlooked this. And immediately when we tried to go for signing, the Mozambican government sort of said, hey, you have all these capital gains withholding taxes that are due. So I do not believe that the two South American governments are just going to say, hey, even on change of control, these capital gains are not due. They will be due.
Gotcha. So just to summarize that, for my understanding is, okay, so oftentimes you'll get a scrip deal, and the implication is these companies think they can get rollover relief, we call it in Australia, where there's, no capital gains tax payable because it's a scrip deal. But what you're saying is that's wishful thinking in the context of the government regime.
Yeah, it is wishful thinking. There will be so many. Rollover relief is definitely, you can say, is out of the question, given that they will be getting a share that is primarily listed in Australia now. BHP is primarily listed in Australia. So with exchange controls and the various other agreements that are embedded within Anglo American, I don't see how you can get rollover relief.
And BHP is also listed on the Johannesburg Exchange. Do you think perhaps that is one of the reasons behind why they have skirted some of these, or thought they could work a way around it?
I think the BHP has a small secondary listing on a Johannesburg Stock Exchange. I mean, when these guys, the South African shareholders, are holding it, it's not the same implication as being able to hold Anglo, but as a primary listing between, let's say, the Joburg and London. So they were able to do South 32 easier because of their secondary listing. And they didn't have those issues when it comes to primary listing.
Step us through how you've evaluated kind of each phase of this, live deal as you've seen it sort of play by play, Tshepo, because obviously there was a deal leak and then confirmation, and then subsequent revelations of several increased prices from a heightened merger ratio perspective. No movement on structuring. And Anglo have come out and said that they'll basically do a strategic review involving spinning Amplats themselves. Do you see that kind of, that the evolution of things to date as an indicator that a deal is likely or probable to eventuate, or do you just see it as like, completely unpalatable at the moment?
I think the deal is unpalatable. I don't see how within a week they'll be able to sort of come to an agreement. But more importantly, the way the defense on the Anglo side has worked is, if you look at the guy who's sitting at Centerview, I will say that he is my ex-boss, who's actually running this. So he understands all these details, in terms of how you actually navigate, not just on the mining side, on the South African side, on the South African Reserve Bank side, on the South African Revenue Service side. But more importantly, I don't think when Anglo issues an announcement saying that contemporaneous deal whereby you have a measure and 2D measures has never been done, I don't think it really sort of the BHP guys understand what they're trying to sort of say there, because they came out immediately saying we're not going to change anything. So the way Anglo-American are playing the defense is just effectively show their shareholders we have not blocked this deal. We have engaged with BHP Billiton. We have explained to them the issues around this, not just on the valuation side, because they are calling it significantly undervaluing the asset. There's a value side, and they keep on stressing this issue that, on the structure side, we do not see you even being able to do this in the next 3 years. And our strategic review will be complete in the next 18 months. And BHP and its advisors are not just reading between the lines. How can they potentially move forward? I mean, I thought about maybe potentially something like a copper JV in South America. But JVs as well, for me, is fundamentally just that you are trying to assume that there are synergies. And synergies are numbers that no offense to bankers out there, you just thumbs up, You have a number of assumptions when it comes to the real world. They never eventuate. So I'm sorry, bankers, but it's just numbers. So with that, I'm not sure how you sort of, maybe there is something there when it comes to your copper JV, but you really have to firm up the numbers and firm up what you are thinking around there, When it comes to cost of goods sold and all those things around synergies, oh God, 5 years down the line, this is sorry,
I totally agree with you, by the way. Having put together my fair share of synergy projections, I totally agree with you.
Tshepo, I'd love to get your thoughts on Anglo's sort of go-it-alone strategy, as it's kind of been dubbed. What you sort of think. I know you're quite familiar, and you've shared some comments on the likes of Amplats and their plans there, De Beers, and you had some ideas around the strategy in African copper as well, talking about the likes of DRC and Zambia. Can you share a bit of insight that you've got on these assets?
Yeah, I think that strategy makes sense, to be honest. I would not have demashed Anglo-Plats, but given that they managed to get the minister on site, maybe it is the way to go. You saw the minister in South Africa sort of supporting them, and that means that they will get union support, which is very important in restructuring those assets. If you think about it, platinum, 2/3 of platinum is currently loss-making in South Africa. So you need to shut down a lot of shops. So maybe as an independent entity whereby the Anglo shareholders in South Africa are holding that, fantastic. Maybe that's the way to go. When it comes to Kumba is more like Rio and BHP. China is past peak steel. So where are you going to send your iron ore? Luckily, when it comes to Kumba, it's like Australian iron ore, it's higher grade. Therefore, you can feed it into a direct reduced iron and hot brick iron. Therefore, can Anglo find a partner in the Gulf, because you do need abundant cheap electricity? Can you find a partner in the Gulf and send this iron ore there, turn it into HBR or DRI and send it into potentially Europe for the steel industry? I think that's a route that they can actually take. When it comes to De Beers is a fantastic asset. I don't think Anglo should actually exit all at once. It can be a partial forward sale and or forward sale, whereby you bring in one of these sovereign wealth funds. They can write those big checks. You can potentially bring in a mega fund in the US. These guys you can write 2 3 billion of checks. They are there. This is an asset. This is a Gucci. This is an LVMH. It is just a luxury goods asset. But they have to be careful there in terms of what they're doing. If the two main assets are in Botswana and Namibia, okay, Botswana mostly, but they have to be careful in terms of how they deal with Botswana, the government of Botswana. It'll be very crucial in bringing them along into whatever structure they end up with. But when it comes to the key one, when it comes to copper, about 3 years back, there was a restructuring in Zambia. Let's start with that. And all these key miners, they went, for lack of a better phrase, they weren't aggressive enough in terms of going after those assets. You know that those assets can produce 250,000 tons of copper per annum if they're run properly. All these miners were quite tentative. They still don't have the risk appetite to go into this into the copper belt, to be honest. We have seen that. So it is Mopani. I believe that you still need a miner within Mopani. And Abu Dhabi is currently in there as a financial investor, but I believe that you still need a miner. When it comes to KCM, which is owned by Vedanta, you are going to need a miner with a balance sheet who actually understand underground mining. So there is still a role for the big miners within that. And if you move over to the DRC, we've seen what Friedland has done with Kamoa-Kui. It's just, they're producing at 6% rates. They're using hydropower. So when you talk about things such as ESG, they meet them immediately.
It's amazing. You listen to Friedland on the but you just listen to him speak on the earnings call, and you're like, I just want to market buy shares.
I mean, he's in a different league. Let's be honest. You can't compare him to everyone else. To do Kamoa-Kui, to do Oyu Tolgoi, they've put aside something like $100 million US dollars for more exploration within the DRC. It just tells you that you're dealing with a different beast. He understands what he's looking for. And he is the only other big project that he has not discovered is Reko Diq. And you're seeing what they're doing both at the Ivanhoe Mines, Ivanhoe Electric. It's just fantastic what these guys are doing. I think they're rewriting the scripts when it comes to risk-taking and exploration. They will most likely find another project, honestly, a tier 1 mine. And tier 1, I'm talking about 250,000 tons per annum. They will most likely find another one in the DRC. Because if you think about it, the likes of Teck were in the DRC, not even in this region whereby they have Kamoa-Kui. I think 100 kilometers outside of Kinshasa, they did a lot of work there in the 90s, when copper was at $1 per ton, so $1 per pound. And they left the DRC during all that instability. So we know that the copper is there. Potentially, there are 2-3 more tier 1 mines in the DRC. And in Zambia as well, maybe an additional one as well. You've seen what these guys are doing as well with their tech. Even though the announcement was not really what they portrayed it to be. But there are a few mines there in the copper belt, that can move the needle for the big miners. Rio Tinto is fine, they're going to print money when it comes to Oyu Tolgoi. Everyone thought they were crazy going to Mongolia, but they're going to print money. When it comes to someone like Barrick, they're going to print money in Pakistan. They're dealing with the Pakistani government quite well. They're trying to bring in some Gulf capital into that. So they're fine. It's just, what do you do? I mean, it's not just BHP. It is Anglo as well. How do you get those growth assets? You have to be aggressive, in Africa. You have to be aggressive in South America. So we will see. I mean, it is not going to be easy, but most of these guys, you just need that risk appetite to say, I'm going into this country, I'm going to spend this much money, I'm going to try and find this mine.
One of the takes I'd heard trying to kind of contextualize BHP's apparent lack of preparation in this deal is that, maybe it was all a show just so that, Mike could ultimately get his board to realise that the only way they can actually get hold of copper growth is by getting comfortable in a different jurisdictional risk sort of context, or be that DRC or be it Vicuña or whatnot. Do you think that's plausible?
It is plausible. It is plausible because they're starting to leak out all these various messages that to build an escondida right now will cost them 25 to 30 billion US dollars. So maybe it is that, and you have seen with a lot of these shareholders, especially, Rio, people gave Rio such a hard time to go into Mongolia. We must remember that. 8 years back, it was looking like they were reckless. They didn't know what they were doing. It's just that right now we're talking about a transition and electrification. But people were not really kind to Rio, for a very long time. What are you doing? Mongolia is very difficult to do this. And is it the way for BHP to say, we need to go to the DRC? We need to put people on the ground. We need to take that risk? Potentially. For the fact that someone like Friedland, who started a small company, has managed to come up with Kamakuri and Oyu Tolgoi. And the big guys, even Rio didn't discover Oyu Tolgoi. It's Friedland. Mm-hmm. The fact that you have an individual out there, an entrepreneur, who's done a better job than the big miners with all their resources, it doesn't say much for them. But yes, you need more risk appetite. South America, yes, you need to be in South America if you're a diversified miner, but you cannot afford to say that, Africa is too risky. We see that when we speak to a lot of Europeans, a lot of Americans, they cannot get their head around the DRC, what is happening there. Even Zambia, they really struggle to sort of say we're going to put capital down in these countries. Maybe, I will not dismiss it.
It's interesting because China hasn't struggled to understand.
China learned a lot of lessons when it comes to iron ore in Australia. They got it wrong so many times. They pumped so much money. No offense to Australians, but a lot of Australian billionaires were created when it comes to iron ore and coking coal. China learned a lot of lessons along the way in terms of how they do things, in terms of how they deploy capital, in terms of how they structure things, in terms of how aggressive they are. And they just they know how to operate in Africa. Every deal, when you see a deal coming out there, small man, big man, the Chinese are around. They're sniffing around. And you know that they can go just a bit further than everyone else. But they're getting some competition now when it comes to Gulf capital. It has woken up to the financial returns that you can actually make from copper going forward. That's the only competition that the Chinese have right now. When it comes to the Americans, the Europeans, they're just not there at all.
We have seen the Chinese take a bit of a step back in recent years. There was that 2010 to 2020 period where investment was super, super strong. Xi was pounding the pavement, talking about the One Belt, One Road initiative. And beyond just mining assets, there was phenomenal amounts of investment across Africa. But have you noticed that the numbers sort of speak for themselves. They are taking a bit of a step back. Perhaps that's a function of having done so much investment already. But do you have thoughts on where they're going to spend their money over the next decade in Africa?
I don't think they're taking a step back. They're not just investing. It's not scary. It is a reality. You go out there into the DRC, the Chinese are not just building mines. They're not just building roads. They're building border posts. Everyone is talking about this line that's going all the way through Angola, but they forget what the Chinese are doing on almost the eastern side as well. They're pumping money to be able to get as much ore out because they have the refineries, they have the smelters in China. So they're not stepping back at all. Every time you speak or listen to a promoter, they are somehow having a conversation with a Chinese entity. And when the Chinese entity, you know that they already have approvals from the likes of NDRC, the likes of SAFE, so they can move ahead and secure that asset. So I don't think they're taking a step back. They just know what they want right now. They made a lot of mistakes in the 00s, but now they know exactly what they want, how to approach it, how to secure it. And they don't make a lot of noise about it because they know that all these Western publications will be saying X, Y, and Z, but they are everywhere.
On the point of Western publications, I think quite a bit of ink has been spilled over the capability of Anglo's board just back on the deal. Have you got a view on their capability? Obviously, the share price performance over the past 18 months hasn't been too strong. That's what led to the deal. But is there confidence, with you and in country in South Africa that the team, Duncan, that are there at the moment can turn it round and execute on the strategy that they've put forward?
I don't think there will be. To execute this strategy, you don't need to be that smart. And maybe I'm a bit biased. And sorry, maybe I'm a bit biased, but Anglo during the Treha days is not Anglo right now. We haven't seen those type of the likes of Treha. They were really trained by the big mining guys. They knew how to operate. They went up the ranks, even the executives. It's someone who went to school, started at Anglo-American from the bottom, was PA to the CEO, PA to the board. They really understood how to execute these things. And right now you have more, for lack of a better term, professional CEOs, professional CFOs. They don't have that, Americans will say moxie. They're just not big personalities. Even in BHP, to be honest, you no longer have those guys, South Africans that came with the bulletins. Yes, aggressive, but they know how to get deals over the line. But right now, Anglo-American, they execute this. They should be able to. I don't think you need to do very much, to be honest. You already have buy-in from let's take Anglo Plus. You already have buy-in from the minister. You'll get buy-in from the unions. When it comes to Kumba, you don't need to really do much. When you sort out Transnet in terms of being able to actually get more ore out through the rail lines, you'll be able to do that. Can they be smart enough to sort of pair onto the South African government, work with the Gulf states, as I mentioned earlier, to be able to do this HBI, DRI around the Gulf and make sure that they can supply that steel into green steel into Europe? I don't think it should be a struggle. I don't think it's something that is that complicated. It's not Friedland going out there to Mongolia with a backpack almost. These are things they should be able to do, in my opinion.
It reminds me of one of the pieces of one of your quotes you've written in your post. Buffett said, "I like Coca-Cola because even an idiot could run it." And this is exactly what Anglo-American is with copper, which I'm guessing you're making a certain analogy there. But it is interesting, right? Because I think not everyone kind of looks at it that way, but if you kind of contextualize absolutely like mining M&A history, it's easy to point to Rio Tinto's horrible track record with M&A when it comes to Olcan, when it came to Riversdale, for example, and in a lot of ways because it had the humming Pilbara iron ore business it had, it kind of, those horrible value destructive deals have been forgiven because of the absolute kind of the Coca-Cola equivalent that the Pilbara iron ore business was, right? And what you're kind of saying is that's what Anglo-American's copper business is going to be for the next 3 decades or so.
Yeah, I mean, one thing that you mentioned there, iron ore and Chinese steel, just everything that Chinese steel drove. We didn't really put a magnifying glass on the decisions by the diversified. Because, these guys are producing iron ore at what? Less than $30 per ton. Sometimes it was going out to $200 per ton. It's just a cash machine. So we didn't really question. The likes Rio Tinto, you are right. It's not just Alcan. You remember Riversdale as well, which was ASX listed they bought in Mozambique. That as well, they had to write off totally. Anglo with Minas Rios in Brazil. If iron ore prices went that high, it would have been an absolute mess as well, an absolute mess. BHP on the petro side as well, they got it absolutely wrong. Potash, we've been talking about potash for so long, it hasn't really taken off. So most of these diversified miners, other than, to be honestly, Glencore and Extractor, then again, you're talking about entrepreneurial type of CEOs. It's very different in terms of how they make their decisions other than professional CEOs. The only people who really have made smart decisions, it is the Glencore Extractor guys. And obviously the likes of Friedland and Ivanhoe. But the other three guys, their decisions are always quite suspect. If you strip out various things, various exogenous factors like that Chinese steel, you start to realize if you didn't have Chinese steel, Alcan would have killed Rio. It is that simple. If you didn't have Chinese steel, US share will have killed BHP Peloton. If you didn't have Chinese steel, Minas Rios would have killed Anglo-American. So it is this simple. They got rescued by very exogenous factors, which we know CEOs will take credit for.
On the point of Glencore, that's another company I wanted to speak to you about. They came out, I think, a week or so ago and really put forward their support of South Africa, saying it's not as bad a jurisdiction as many people have made out to be. They haven't moved royalties. Yes, there are some difficulties with the infrastructure, the power and whatnot, but they were really, putting their foot forward and supporting a country which they have a long history in. How do you see their sort of future? I'm just interested in picking your brain on a company like that. They had for so long people with skin in the game, like you said, they had this entrepreneurial focus, but it has kind of shifted somewhat since Gary Nagle has taken over, and the tide has somewhat turned there. How do you see their future in M&A, in African mining assets and whatnot?
I think when it comes to they have to be thinking. I mean, these guys they don't really make publications or pronouncements, but they have to be thinking strongly in terms of how they secure, especially copper. As you may remember, they're being kicked out of Mopane in Zambia. So, and when they are in the DRC, and they need the raw materials to trade. So they have to be thinking about a number of things. I'm not sure what. I haven't touched base with a lot of people within there, but they have to be thinking about even potentially how they can come into that Anglo-American deal. It might not be right now, but I'm sure that they're trying to think about. They're very smart guys. You don't want to take the other side of the trade when it comes to Glencore. So even that, they don't just say things. Why did they need to sort of come out in support of South Africa? Is it trying to, or are they already? I doubt that they haven't been talking about it or thinking about it. They're too smart not to have been thinking about these things. They don't tend not to react to things. So potentially they're thinking about something along the lines of Anglo. They've already tried with Lazenbeck, if you remember, about 12 years back, more than 12 years back, maybe 14 years back. They tried it and they weren't successful. They got sort of rebuffed quite quickly. But right now, can they potentially think of something? One thing they didn't like about Anglo was PGMs. Now, immediately after PGMs are outside of Anglo, and they've already initiated discussions with various South African institutions. Are they not going to try something? Are we surprised?
Yeah, that's interesting. There's one part of the BHP-Anglo deal, I'd love to kind of go a bit deeper on. It's a recurring kind of theme in your post, and that's I think your recurring praise for the lead banker advising Anglo's board behind Centerview, who you mentioned is your former boss. What is it like? What's your kind of history working with this guy? Why do you respect him so much? And how do you think that he's kind of been advising Anglo and he's advising Anglo right now?
The guy sort of he made his career advising South African miners. When it comes to Anglo Gold. Even before they took over Ashanti, he was the main director. He was still quite a junior in terms of years, but not in terms of seniority. Even when it comes to Anglo-American, he has been all the main deals that we did for Anglo-American. He understands that. He not only understands M&A, he understands mining, and he understands these assets, but more importantly, how to navigate the politics around them. He's the type of person who, when they actually he not only talks to government officials, he will actually go talk to the shareholders. He'll actually open those discussions. When he has a client, he literally has an ongoing conversation with the shareholders to understand if we react this way to this, if we take this approach on X, what are you going to say? He never shoots blindly. He's just a type of banker. Very meticulous in his approach and very smart. But more importantly, he has so much institutional memory. When he was trained, it was the main guys who did all these DLC structures for the likes of Rio Tinto, BHP, Billiton. He was an analyst then. So he has all this institutional memory from the 90s. I think sometimes experience and institutional memory is more important than how smart you think you are. So he is just the type of person, even the way he's conducting this defense. He didn't immediately say, I don't want to talk to you, BHP Billiton. It's the way he he accepts their letters. He goes through it. He goes to the board. He presents his case in terms of what Anglo should say. The votes. And you can see every time the board has voted unanimously in terms of the decision. It's just how he conducts his M&A business. He's very, very meticulous and very smart. So, and every time people are not reading the announcements and just trying to dig deeper into what he's saying. Even the simple things such as contemporaneously trying to do a measure and 2D measures has never been done. So it actually increases the execution risk. So people like BHP, that's what surprised me about the BHP guys. It seems like they're not listening to what he's saying. So he is excessively smart and experienced. And I think he knows what he's doing at every point. He's speaking to the shareholders, he's speaking to the board. And that is just how I've seen him approach this.
There's one shareholder he must have some dialogue with who's had some kind of public views on the matter, and that's Evie Hambro of BlackRock, who is like overweight, kind of long Anglo, and I'm sure he's been kind of vocal about wanting an outcome here ultimately, which I think the read through on that is he wants BHP to bid to the bejesus. But what do you think his conversations with Evie and other shareholders have looked like?
I mean, I don't know. I'm reading the BlackRock announcement quite differently. Given that you have another PM down here, I think Evie is now head of thematic or something along those lines, and there's a different PM who looks after these things. So I'm not sure. I'm reading it slightly differently, that he doesn't want a hostile deal. He doesn't want a hostile approach. He doesn't want a very destructive type of process whereby 18 months, you remember what happened with Rio and BHP, all these public spares all the way 16 years back. I think he wants this to be as civil as possible. If there's a deal, there's a deal. If there's no deal, there needs to be reasons why there's no deal. And from the way Anglo is running this, I think they're giving enough reasons why there must not be any deal. But I still maintain there's potentially a copper JV to come out of this. Is it with BHP, or is it with another miner or another trader such as Glencore? There's potentially that to come out of this.
That's fascinating, and we're probably going to air this, in about 12 hours from now, or there or thereabouts, maybe a bit longer. But I doubt. It'll be the official deadline yet by the time this airs of the 1 week extension. If you were to just, bet what we hear in that period of time before the extension, how do you think the next 36 hours plays out, Tshepo?
I think it will be quiet, and in the end, my view is that on a balance of probability, BHP Billiton will issue an announcement that we've had discussions with Anglo. And we could not work around some of their demands. Therefore, we're going to walk away from this. Mm-hmm. I think on a balance of probability, that's what's going to happen. Fascinating,
Tshepo. Is it anything more you'd like to leave our audience with? We've gotten a lot out of this conversation so far.
I think the most important thing, that the discussion that's coming out of this when it comes to copper is there's not sufficient capital to actually exploit what we know is available out there. You have very early stage projects. I think the only good thing that I will say, the ASX, you have at least a bunch of money there that's able to give, that's able to give some of these promoters money to come into the likes of Africa and explore. But we need far, far more capital than we currently have. I estimate the specialist funds, I'm including everyone in the Denham, RPN, RCF. In total, they have about $17 billion of AUM. For copper alone, we are going to need $200 billion. So we need allocators to find more money coming into the space. Otherwise, we can forget about the transition. We can forget about electrification. That's it for me. Mining needs far, far, far more money, and not just listed equities. Listed equity for me is not the best way to develop projects. Private equity, we know how you actually source money out there. You just need someone who's able to sort of look through some of the issues this month at a project to be able to say, I'm in this for the next 3-5 years. We just don't have that capital in mining right now. We need it desperately.
Beautiful, Tshepo. That's a view we're sympathetic to. And I'd encourage any of the money miners, our listeners out there, to follow you on LinkedIn, because you post some really fascinating stuff. So thanks for coming on the show.
Thank you, guys. Thank you for having me.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.